7. This is making the trial balance. So after we did part 6 and we input those transactions, what we're now going to go through and do is we're going to total up each T account. And then we're going to be organized. We're going to create a trial balance by listing out our assets, liabilities, and equity. And let's have some fun. So right over here, I'm looking at the transactions I just went through and input from part 6. So what I'm going to go ahead and do is I'm going to total up each of these T accounts. Now, for the loan payable, common stock, and account payable, it's pretty easy to do because there was only one transaction, as well as over here with equipment, there's just one. And then with inventory, there's also just one transaction. Now, for the cash T account, though, this looks a little bit more complicated, but it's not. With accounting, the reason why I love accounting is that the math is relatively simple. So over here with cash, we've got 250,000 of debits and we've got 15,000 of credits. Now, how much cash do I have? Well, I got 200 from investors. I borrowed 50 grand. I paid 15,000 for equipment. So my ending balance for cash is going to be the 250 minus the 15 or 235. I subtract the smaller from the larger balance and I leave the remainder on the larger side. Just remember that. Now, when it comes to setting up the trial balance, what does a trial balance do? Well, I've gone through and I've recorded all these transactions, but now I want to make sure that I did them correctly. So over here, I've got debit and I've got my credits. What I'm going to do over here is I'm going to list out accounts by assets, liabilities, and owner's equity. This is going to mirror what my balance sheet is going to look like, and you'll understand why this step is so important. So this is my trial balance, right? I can say for YI, and we'd say trial balance 12/31/22. My first asset is going to be my cash. So all I'm doing is I'm taking the ending balance over here for cash of 235. Common stock is an owner's equity account. But look, this has a credit balance. So I want to make sure that I'm putting that credit balance on the right. Accounts payable is a liability. Over here, accounts payable is going to have a credit balance. The one that almost escaped me, but I caught it, is my loan payable. My loan payable is also going to have a credit balance of 50,000. Over here for my assets, I've got equipment. This equipment over here is at 15,000. I have inventory. My inventory is also an asset at $20,000, unless we're doing narcos and then it's a liability and we're going to be in jail. We don't want to go to jail. Right over here, or maybe, I don't know. No, we don't. Okay, so right over here, I'm going to go over here and total up my total debits. I'm going to add up my cash, equipment, and my inventory. And this is going to give me 270. Over here on the right-hand side, I'm going to add up my account payable, my loan payable, my common stock. And look, everybody, we've balanced our total debits equal our total credits. The purpose of the trial balance is to make sure that our total debits equal our total credits. If they didn't, I want to go back and look, say, okay, I got cash, I gave out common stock, debit, credit. Here, I purchased equipment for 15 cash, debit equipment, credit cash. Over here, purchased inventory on account for 20,000, got inventory, which is an asset, bought it on account. So it's going to be accounts payable. Over here, I borrowed money. So I got cash coming in, I'm crediting loan payable. So that's enough for this. And I'm going to see you on the next video where we're going to be preparing. Can we say it? Can we say it? We're going to be preparing a balance sheet. So again, I want to thank you. Please feel free to leave your questions below and appreciate your liking and subscribing. Have a great rest of your day.